Dorex Weekly Gold Markets Update November 24, 2025. Are we headed for a gold rush fueled by inflation? Inflation is surging, but gold production is lagging. Buckle up because this imbalance could have a dramatic impact on your investments. According to a new report from Dorex, the persistent rise in consumer prices, coupled with limited gold supply, is creating a perfect storm in the global gold market. Let's dive into the details. J.P. Morgan Chase's latest analysis reveals a critical point: newly mined gold only increases the total global gold supply by less than 2% annually. To put that in perspective, it's like trying to fill a swimming pool with a garden hose. This limited supply is a long-term trend, further exacerbating the supply-demand imbalance. Meanwhile, inflation shows no signs of slowing down. The Consumer Price Index, CPI, across OECD, Organization for Economic Cooperation and Development, economies hit 4.2% in April 2025. That means your money is losing purchasing power faster than ever, and people are looking for safe havens. And this is the part most people miss: gold is often seen as a hedge against inflation because its value tends to rise when the value of currency declines. This can only lead to one outcome, warns Kochanski, CEO of Dorex, suggesting an inevitable upward pressure on gold prices. What that outcome is that people will hoard gold more and more as inflation continues to rise. India's appetite for gold soars. Kochanski highlights a significant surge in gold imports to India, reaching a staggering $14.7 billion in October. That's nearly triple the amount from the same month last year. This massive influx of gold is driven by cultural traditions, investment demands, and a desire to protect wealth. But here's where it gets controversial. This surge in demand is also widening India's trade deficit, pushing it beyond $41.6 billion. Some economists argue that this could create economic instability for the country, while others see it as a temporary adjustment. What do you think? Is India's gold rush sustainable? Gold's performance and central bank activity. Last week, spot gold traded around $4,083.60/Oz, marking a 2.1% dip. Despite this slight decrease, it remains approximately 59% higher year-on-year. This impressive growth reflects strong safe haven demand, driven by concerns about inflation and broader macroeconomic uncertainty. Investors are flocking to gold as a store of value during these turbulent times. And central banks are doing the same. According to the World Gold Council, WGC, central banks added a net 1,045 tons of gold in 2024, the third straight year above 1,000 t, more than double the 2010-21 annual average of 473 t, Kochanski points out. This significant increase in central bank gold reserves demonstrates their belief in gold's long-term value and its role as a strategic asset. A recent WGC survey further underscores this trend, with 95% of central banks expecting global gold reserves to grow over the next 12 months. Furthermore, 43% anticipate increasing their own holdings. This indicates a strong and consistent demand for gold from central banks worldwide. In Q3 2025 alone, central banks reportedly added 220 tons of gold, up 10% year-on-year, according to the Economic Times. This consistent accumulation reinforces the view that central banks see gold as a crucial component of their reserves. Gold's rising status as a reserve asset. In a notable milestone, gold surpassed the euro as the second-largest central bank reserve asset, after the US dollar, in 2024, as reported by the Financial Times, citing European Central Bank (ECB) data. This highlights gold's growing importance in the global financial system, and its acceptance as a safe and reliable store of value. The bottom line. The dynamics of the global gold market last week underscore a widening gap between constrained supply and inflation-driven tone in the market, and sustained central bank and sovereign demand, concludes Dorex's CEO. In simpler terms, there's not enough gold to meet the growing demand, especially as inflation continues to erode the value of other assets. Together, these factors continue to reinforce gold's strategic position in global markets and personal portfolios. This suggests that gold is not just a safe haven asset, but also a key component of a well-diversified investment strategy. What are your thoughts on the future of gold? Do you believe it will continue to rise in value as inflation persists? Or do you think other factors will come into play? Share your opinions in the comments below. Ends.